What's up everybody, it's Michael at the Investments Lawyers, and today we're going to talk about investment fund side letters. So what is a side letter? So right here we have a chart that shows a very simple structure of a fund. We have the fund down here, the general partner controls the fund makes investments, and there are limited partners in the fund. Now, in this case, the limited partners have a 2% fee and 20% carry. And we go into what these mean in other videos, but these are basically economic terms that apply to all limited partners. Now, an investor, a prospective investor, might see this and they might say, you know what, I like everything about this, but the fee is too high. 2% is too much. What can the GP do in this case? What can they do? So let's go to the next slide here. There we go. So what they can do is if that investor wants a 1.5% fee, the GP could amend or revise the fund agreement either before or after closing to say, okay, fine, the fee is 1.5%. So it used to be 2, let's go back, it was 2, and the investor complained, and now you're at 1.5. So that's one way that you can do negotiations. Now, another way is to do a side letter. And here we show a side letter. So a side letter is, instead of switching the fee for everybody, you enter into a special agreement with just one investor or multiple investors, which is called a side letter, and they get their 1.5% fee, but all of the other investors have the same 2% fee. So you have kind of two options when you're going to negotiate. You can either change the terms for the whole fund, or you can do a side letter where you give special terms to just one investor, or you could have a bunch of side letters with different investors. So what are some other terms other than, fees and carry that you might include in a side letter? Let's go through them. One is a most favored nations provision. This is kind of a complicated one, but in general, if an investor gets a most favored nations provision, it means that they can pick terms from other investors' side letters. They can just say, hey, that's a nice term. Let me take that for my investment. Now, typically, an investor with an MFN only gets to take provisions from other investors who invest as much or less than the investor with a side letter has. The investor with the most favored nations provision has. So if an investor has a $1 million commitment and an MFN, most favored nations, they can take provisions from side letters with investors that invest $1 million or less. So if someone comes in and invests $5 million, they're not going to be able to steal provisions from that side letter. So that's the most common one. The most complicated one. Another one, excluded investments. Some investors don't want to invest in certain things. So like porn, guns, oil, things of that nature. Sometimes investors don't want to invest outside of certain jurisdictions, or they don't want to invest in cryptocurrencies, things like that. So they basically put like a blacklist of investments in their side letter. And so if the fund does make one of those investments, then the LP is excluded. Affiliate transfers. An investor might want a right to transfer their interest to an affiliate. Certain investors have kind of special tax matters where they have special requirements that they need the GP to accommodate. Many funds have an LP advisory committee, which is basically a committee of LPs. So often the fund, the GP, will promise LPs a seat on that committee in a side letter. Sometimes fund of funds have special requirements where they're like, hey, we need to disclose all this information to our own limited partners, and there's special disclosure requirements around that. Co-investment rights. So let's say the fund does a deal, and let's say it's a $10 million fund, and they come across a $5 million deal. It's like a really good deal, but they don't want to put half the fund in one deal. So what they might do is they'll say, okay, we'll put $2 million into this investment through the fund, and then we'll spin up a co-investment vehicle to fill the remaining $3 million of allocation. Often when GPs do this in the co-investment vehicle, they'll give reduced fees, reduced carry. So sometimes they'll give LPs the right in advance via side letter to invest in those co-investment vehicles. Big LPs love this. This is something that LPs always ask for. They're like, hey, what about co-investments? And depending on the bargaining power of the fund, sometimes they give them up. Confidentiality, some investors might want to make super clear that, you know, the GP or the fund aren't using the LP's name, things of that nature. Pro rata rights, if somebody invests, you know, 5% of fund 1, they might say, I want the right to invest up to 5% of the commitments in fund 2, fund 3, etc. 10 and 11, liquidity rights, information rights. So historically, some things that have been given via side letter are the right to preferential liquidity. So, you know, maybe you have a shorter lockup period or a less restrictive gate in an open-ended fund. Maybe you can withdraw your interest before other people. Information rights, maybe the GP will give you special information rights that aren't available to other LPs. Like monthly meetings, special reports, things of that nature. Now these are red. We'll find out why they're red on the next slide here. So we have a new law here. The SEC passed a final rule last year. It goes into effect this fall of 2024 for some fund managers and next spring for other fund managers, depending on size. And there were a lot of rules here, and some of them apply to side letters. Now, the new rules apply to what are called private funds. And a private fund, technically is a fund that relies on 3C1 or 3C7 of the Investment Company Act. Now, what that means mostly is, hedge funds, private equity funds, and venture funds, debt funds as well, but not real estate funds. Real estate funds are typically not private funds, and so the current understanding is that these rules that I'm about to talk about do not apply to real estate funds, but they do to basically all these other types of funds. So first, material economic terms. If you enter into a side letter with somebody, then you're going to have to disclose the material economic terms of that side letter to other investors before those other investors invest. So that's, a pretty big thing. You're going to have to be showing all these material terms to prospective investors. Other preferential terms, you don't have to show prospective investors before they invest, but you do have to show everybody after the fund's final closing date. So once everybody's in, you have to say, okay, there are these other provisions too. Now there's a prohibition, so not a disclosure requirement, but an actual prohibition on certain types of liquidity rights, so those preferential redemption rights that we just talked about, and certain information rights if these would be detrimental to the other limited partners. So for example, you could think of, maybe a special LP has the right to withdraw at any time. Other people are locked up, but this LP has the right to withdraw at any time, and the GP is, giving them special inside reports every month. So that would probably, be bad for other LPs, because that special LP could find out, oh, the fund's not doing so well in advance of the other LPs knowing, and then they could yank out their commitment. I mean, that's just one example, but these are how the private fund rules affect side letters. So some fund managers, private fund managers, are a little more reluctant to enter into side letters now than they used to be, because it's okay, well, now we're going to have to disclose these side letters to everybody. So people are starting to throw down the, we're not doing side letters line, and we'll see how that goes. But again, these private fund rules go into effect this fall for smaller managers and next spring for larger managers. Thank you for sticking around on this video on side letters. I hope you found it educational and super fun, and we'll see you in the next video. Thank you. Bye.